Hi, thanks for watching today's video. I'm Brian, the Finance Ninja. Today, we're going to discuss Palantir's not million, not billion, Palantir's trillion dollar problem, as described by Jaulian Financial at Seeking Alpha. That is a pretty big problem, wouldn't you say? So in today's video, we're going to discuss what is this trillion dollar problem, Jaulian Financial's argument, my counter argument, and where I think they went wrong, my valuation for Palantir using two valuation models, both DCF and multiple, and what I think Palantir is worth today. Here's a hint. I think Palantir is severely undervalued. Don't forget to smash that like button and subscribe. This video is for entertainment purposes only. I'm not a financial advisor. I'm not your financial advisor. So please, do your own research. Let's get started. So as you can see today, Palantir had a pretty nice day, up 5.09%. In total, up 1.26% after hours. Pretty good. Market cap, $43 billion. So let's get into the article. Jaulian Financial states that Palantir has a $1 trillion problem. Looks like it's about $1 trillion market cap buzz. Let's dig into their article a little just to see exactly what they are referring to. Let's start with the smoke. The smoke. Scary, isn't it? Jaulian states that this $1 trillion valuation wasn't designed by any high-profile money manager. You know, the ones that failed and destroyed the economy in 2008 or 1987, 1929. Pick your year. There's plenty to pick from. Let's just say they don't have the greatest track record in the world, to say the least. Most can't even beat the S&P 500. I mean, these are your gods, in a sense. So instead, he states it is by finfluencers on YouTube that created this $1 trillion so-called problem. You know, people like Tom Nash, Max Maher, and yours truly. So first off, now we're in the fire. So anyway, he claims that we create clickbait in-depth analysis. Clickbait in-depth analysis. Now let's look into this just a little bit. This guy, Jaulian Financial, he titled his article, Palantir, a stock with a $1 trillion problem. And he claims that we're using clickbait. So first, how can you claim others lack in-depth analysis when your own article talks about nothing other than numbers? Where is your depth, Jaulian? Where is the talk of Palantir's product? I see none in this article. Where's the Foundry? Where's Gotham? Nowhere. I have many videos on this subject alone. How about Palantir's leadership? I talk about Alex Karp quite a bit. This article, zilch. How about Palantir's competition? I have a video dedicated to Palantir's competition. Dedicated. A very nice video. You should check it out. I'll include links to all of these videos in the pinned comments. So Jaulian, you get a yellow flag. Myself and others on YouTube provide tons of in-depth analysis on Palantir. Where is yours? He goes on to say that DCFs are the best suited valuation method for growth companies. I disagree. Let me explain. In short, DCFs return the present value of future cash flows in order to predict today's intrinsic value. This is not an ideal metric for the growth tech companies, or any company really that is heavily reinvesting in itself, as the company is sacrificing cash flow to fuel growth. DCFs would have failed to capture Amazon in 2000, or Apple, or even Tesla, companies that, in hindsight, are no-brainers. The Value Pendulum blog states that DCF is only suitable for mature companies with predictable, recurring cash flows. DCFs are also heavily dependent on assumptions, i.e., the discount rate. 8 or 12% makes a world of a difference. Like you change it just a little. It's just like the Hubble telescope. You turn a fraction of an inch, and you are in a different galaxy. And he's not kidding. So let's see what the Oracle himself has to say. Warren Buffett says, if you need to use a computer or calculator to figure it out, meaning if the investment is worth buying, you shouldn't buy the investment. Those types of situations fall into the too hard bucket. It should be obvious. It should shout at you without all the spreadsheets. Munger goes on, some of the worst business decisions I've seen came with detailed analysis. The higher math was false precision. They do that in business schools because they've got nothing else to do. They got to do something. So that's their assumptions on that. So neither of them use DCFs. Like Buffett says, it should be blindingly obvious that it's a good investment. And to me, artificial intelligence and data analysis is the go-to industry over the next decade. So for me, this is an obvious investment. So that said, let's play Jaulian's game. Their intrinsic value for Palantir is only $20. As you can see, my fair value is $109 per share. Oh, that's another thing I and other YouTubers give that Jaulian does not. Really, most other financial analysts, they don't give you this information. It's our models. Look at this. You don't see this from the others. Jaulian just gives us the results and just says, trust us. I gave you the models, and I even let you download it on my Patreon and adjust the numbers to your liking. You can download these spreadsheets as well as valuation models for AMD, Intel, Tesla FSD, Tesla Robotaxi, and more at my Patreon. Early bird access is only $1. The spreadsheets include the calculations, which I do not show in this video. They also allow you to adjust the numbers to see what is your fair valuation for Palantir stock. So again, due to Palantir's rapid growth and reinvestment, I personally prefer the multiple model. Here's mine. My multiple model fair value comes in at $138.69. So a little bit higher than the DCF model. Comment down below, what is your fair valuation for Palantir stock today? Tell you what, let's do an experiment. Download my spreadsheet and my Patreon, adjust the numbers to your liking, and let me know in the comments below what valuation did you get for Palantir stock. Thank you to my channel members. Thank you to my patrons. You guys are amazing. You keep this channel going. Don't forget to click the don't forget to smash the like button and subscribe. Thank you for watching, and I'll see you in the next one.